Hi, I want to thank everybody for coming to our down payment assistance seminar. My name is Roger Lazzarino, and I'm the managing broker for Mid-Florida Realty. I began a lending career with Wachovia Bank way back in 1986, and I owned a mortgage company for several years after that. I've been a licensed realtor for the past 15 years, and I've sold over 400 properties as either a listing agent or buyer's agent. I was also a Wells Fargo and Aqua and REO agent for several years, and that's just a fancy way of saying that I was a foreclosure agent, in addition to being just a general real estate agent and broker. The REO, in case you all don't know what that means, everybody is curious to what that means. It's really short for real estate owned. And I'm the author of FloridaDownPaymentAssistance.com, FloridaFirstTimeHomebuyer.info, and mid-florida-realty.com. And combined, these down payment assistance websites receive approximately 25 to 30,000 views a month. I know people say don't believe everything you read on the internet, and that is certainly true. But I will tell you that we do our absolute level best to try to keep up with the mortgage world and all of the changing guidelines and regulations. And frankly, it changes every week, and there's no way that you can keep up with all of the little guidelines. So we do our very best, believe me. Okay, so enough about me. That's always my favorite topic. But let's talk about the different programs and the process of how you actually get the money. There's at least 100 programs in Florida that involve down payment assistance. Some of them are better or worse. And what we try to do is we try to have on the websites the best programs, the ones that most people are going to use. There are some small county ones that only allow $5,000, but they do have a lot of restrictions. And there are other SHIP programs, which are state housing programs, but again, they have a lot of caveats in them. And what we try to do is make your house buying process as simple and least frustrating as possible. But of course, you have to deal with the mortgages, and we help you through it. But anyway, if you qualify for one of the programs, you'll most likely qualify for a couple of them. Mid-Florida Realty specializes in down payment assistance, and we really only work with the most advantageous of these programs to save you as much money as possible and get you into that home for as little money as possible. Most of the programs allow for 100% financing, but 100% financing doesn't necessarily mean no money down. Somebody's going to have to pay for the closing cost, and generally a combination of you and the seller is what happens. Well, of course, we're going to try to get as much money from the seller to pay for your closing cost, but in this market, which is a really hard seller's market, sometimes we can't get anything when there's multiple offers, and sometimes we can get part of it. But you've got to expect that you're going to have to come out of pocket with a little bit of money, and we're going to get into where that money can come from. So it really depends on the house, the loan program, the price of the house, the seller's attitude, and the closing cost could be as little as $2,500 or as much as $8,500. So it's one of those things where we won't know it until we're standing in front of the house. And the closing cost expenses really depend the most on the price of the house, and your credit scores are involved. And we just try to negotiate all the money out of the seller. Okay, so who do home buyers call for help? Well, Mid-Florida Realty has realtors in most of Florida's major markets, and our agents have been trained on several different state, federal, county, and private down payment assistance programs in the areas that they actually live in. So they really do know which programs that are going to make the most sense for your scenario. And if you qualify for a down payment assistance, we're going to know about it. No lender has all of the programs. As a matter of fact, 95% of the lenders don't even originate one DPA program, much less 20 or so different ones. And I'm going to talk a little bit more about that in a little bit. But neither you nor we want your credit pulled several times by different lenders, because it really does lower your FICO score every time they do it. and that can prevent you from purchasing a home in the short term. In some cases, it might take 6 months for those inquiries to lose their point value on the credit bureau's scoring models. So one of the questions I get all the time is, where can my down payment come from? Well, we're going to start off with where your down payment cannot come from. And it can't come from the builder. It can't come from the seller. It can't come from a friend. It can't come from a realtor or unseasoned funds in your bank account. What seasoning means is that the money's got to be in your bank account for 2 full banking cycles, which means you're going to have, and you will be asked to provide this, you're going to have at least 2 months worth of bank statements to prove that that money's been in that account. So if you're storing money under your mattress or what have you, you better go ahead and put it in the bank, because they're not going to let you use it. And it does get in the way of closing sometimes when people don't follow that instruction. So be careful, and don't expect to just pop in $3,000 or $4,000 at the very end to prove you've got cash to close, because they won't allow it, and the loan will crash. The other thing is, it cannot be a personal loan in any form. It can't come from your parents, from your employer, from any relative. You just cannot borrow the money. And what's going to happen is, when you're filling out your loan application, which is called a 1003, you're going to see that question twice. Once when you initially fill out the loan application, and then when we're sitting at the closing table and it's on that same document that you just signed that said that you haven't borrowed any of that money. So those are things that you really need to know what's going on with. The down payment is the money that the buyer uses to establish enough equity in the property to allow the mortgage lender to lend you the balance of the home's purchase price. Because remember, the lender's got to have some equity, other than a couple of very unusual programs that we do have. So the down payment must come from the following sources, and there's no exceptions. The buyer's own bank account or assets accounts, like a 401k or an IRA, or stocks and bonds that they've cashed in, or gold or silver that they've cashed in, something like that. But it's got to come from the buyer's own bank accounts, and the money has to be seasoned. Now, you can go ahead and, let's say, if you've got gold or silver stocks and bonds, you can cash them out, but you got to have a paper trail that I just cashed them out and they were now deposited into my bank account. So if you have any questions about that, you can either ask one of our agents when the time comes, or one of the lenders. And that's really a lending question, but this is how it works. You can have gift funds from a relative or an employer, but they can't be borrowed. And if you do receive gift funds, you're going to have a gift fund letter written out and signed by you as well as the donor. And that gift fund letter is going to say that none of this money is borrowed, that they don't expect to have it paid back. So that is an underwriting guideline, and you need to know it. The final way is through a qualified, approved down payment assistance program. And I will tell you that with the price of the houses these days, probably, this is no exaggeration, probably 98% of the people are going to have some kind of down payment assistance in some form, whether it's a gigantic lender credit or it's one of the DPA programs, but it's going to come from one of those areas. So don't feel like you're getting money from the government, because in truth, there is no free money. Your rate's going to be a little bit higher on the down payment assistance programs, or it's going to be a 0% interest loan, and the rate's still going to be a little bit higher. But the bank has to make some money, and all of these programs are risk-based. So the bank is going to make some money on the risk that you don't have hardly any equity in the house. And that's just the way it really works. There is no free money anymore. But we get through it, and you get to live in your house and then start making payments for the next 30 years. Anyway. Okay. After this slide, we are going to get into the individual down payment assistance programs. But I do want to say some quick things about down payment assistance and why very few lenders in Florida or anywhere else actually write down payment assistance. First of all, less than 5% of the Florida mortgage companies offer any form of down payment assistance. And the question is, why don't they? Because the company earns about half of the income versus a straight up FHA, conventional, VA loan, or USDA loan. And it's always all about the money. There's additional underwriting guidelines that have to be handled, and they have to be handled 100% correctly, or the lender can't sell the loan to the down payment assistance sponsor. The loan officer, the processor, the admins, the underwriters, the closing departments, they all have to be extensively trained on these additional guidelines and required documents. Otherwise, they won't know how to approve the loans or fill out the docs, which means they can't sell the loan. If the loan guidelines are misinterpreted or the documentation isn't filled out correctly, the lender just can't sell the loan to the sponsor. And if they can't sell the loan in a very short amount of time, generally it's 60 days, there's a 60-day lock period. And that's when they actually lock in the rate and reserve your funds, which is probably 7 to 10 days before closing. They only have 60 days after that. So everything's got to be all nice and tidy and wrapped up in a bow. And if that happens, if they can't sell the loan, it becomes a portfolio loan, which means the bank can't get reimbursed for any part of that loan by the sponsors. So that's why very few lenders anywhere actually write down payment assistance. So our first program is the first responders 100% mortgage financing with no mortgage insurance. Now this program, it's restricted to nurses, and I know that there's several different types of nurses and levels of nurses, but pretty much all of them are included in this. The firemen, the actual firemen, not the administrators. EMTs are good. The police officers, but again, not the administrators or not the dispatch people. It has to be the actual police officers. Any active or veteran military personnel, and anybody who works for any of the municipal school systems, including the state colleges and universities or the county the county colleges. And the benefits on this program are just incredible. You receive 100% mortgage financing, but you do have to have at least a 680 middle score, and that would be true of everyone on the loan. And just so everybody knows this, that anyone that's going to be on any loan, whether it's DPA or not, what the lender does is they take the lowest middle score from the two borrowers or three borrowers or whatever, and that's the qualifying score. On this program, there's no upfront mortgage insurance. On an FHA loan, for example, what you do is you take the loan for math's sake. If it's a $100,000 loan, then $1,750 gets put on top of the loan. And of course, if it's $200,000, it's $3,500 that gets put on top of the loan. But in this program, you don't have that. And anything other than an FHA or a USDA loan, you also don't have that condition. There's also no monthly mortgage insurance. And that eliminates, on a $200,000 loan, it's going to eliminate, depending on your credit level, whether it's FHA or conventional, it might be $80 a month all the way to $180 a month. Again, depending on the qualifying FICO scores. So that's a huge savings, not having either monthly or upfront mortgage insurance. The interest rates on this program, they're the lowest ones out there, which is also phenomenal because on all of the DPA programs, they're going to be higher. They're going to be a little bit higher because there is no such thing as free money. So the interest rates are lower, so your payment's going to be lower. So now your payment's going to be lower for a couple of reasons. You're not going to have mortgage insurance, and your interest rates are going to be lower. The other thing that you got to love about this program is there's no origination fee. Again, like 90% of the rest of the down payment assistance programs, there is going to be an origination fee because that's how the lender gets paid on those programs. In this one, it's actually built into the rate, even though the rate's lower. So you're saving at least 1% or $2,000 on a $200,000 loan. And that's a major savings for you as the buyer because you don't have to have that kind of money. You don't have to have the additional $2,000 at closing. So it keeps your closing costs lower. On this one, it's fantastic because you don't have any income limits. So there's no household income limits and there's no income limits for the actual borrower if only one person is going to be the borrower. So if your spouse has poor credit or owes a lot of money in student loans, it's not a problem. We just don't put them on the loan as long as you qualify. So the income limits is an amazing thing. And depending on the variation of this program, and it's your choice, you can always get $3,000 towards your closing cost. So I have literally written deals for nurses and first responders where they bring their earnest money deposit, which is typically about $1,500. They pay for the home inspection and or the pool inspection, and they pay for, the other thing is on this program, there is no appraisal fee. So that, again, that lowers your cost, your closing cost by $500. And there's no first-time home buyer requirement on this program. So this program is clearly the sweetest deal of all of them. And that's why I started with it, because if you can qualify for this one, this is clearly the way you're going to go. So our next program resembles the last program, which is 100% mortgage financing with no mortgage insurance and no origination fee. This is an excellent program. It does have income limitations, but they're not household limitations in terms of you have to use everybody in the household. Again, this is what they call 1003 income, which is just the borrower's income only. And this one's for everybody. This is not just for first responders. It can be administrators, it can be technicians, it can be whoever. So this is a great program. It's also 100%. There is no upfront or monthly mortgage insurance because it is based on conventional guidelines. The income restrictions are 100% of the HUD median income for the census tract, not the county, but it's for the census tract where the property exists. So it is somewhat address based. So what would happen is our realtors would check the houses to make sure that they are in one of these census tracts that would allow this program to go forward. And basically, I would say that 90% of the houses that you're going to be looking at are going to be in allowable census tracts. Where it would not be is where you would have a lot of $600,000, $700,000, $800,000 homes, because that would not be one of the moderate census tracts. So again, one of our agents would make sure before they start showing you property that these houses are in the correct census tract. This also has no origination fees. So again, you have lower closing costs, and that's a major savings. The interest rates on this program match Fannie Mae conventional mortgage rates, so they're not higher like on all of the other down payment assistance programs. And of course, this saves you money. The borrower debt to income ratios go all the way up to 50% on conventional loans, and like I said, this program does somewhat mirror conventional guidelines. So again, this is an advantage because let's say your spouse, you don't want to put them on the loan because they make too much money, but you know that you can afford the payments. So you go all the way up to a back-end ratio of 50%, which that would include your mortgage payment and all of the debts that are in your name. The program does require a HUD-approved buyer's education course, And some of those you can do online that take about an hour. And you don't have to be a first-time home buyer to use this program. So that's another major advantage. So this program, it's our newest program, but it's going to help a lot of people. So our next program is called the Rate Advantage 100% Financing Program. And this too is for everybody. The minimum scores on this program go down to 640. So as long as your middle score is over 640, you're good to go. And it also can do either FHA or conventional loans. This program does not have an origination fee. So again, you save money on closing costs. And it has very flexible debt to income ratio limits, much more so than most of the programs, because this program does mirror the guidelines for either FHA or conventional loans, which on an FHA loan, a lot of times they can go to 52, 53% of the debt to income ratio. And on the conventional loans, they can go up to 50. So that's a major advantage. And this program, like the state and the county programs, does require mortgage insurance. And so it would mirror pretty much like what a regular loan would look like. These rates are competitive 30-year fixed rates, so nothing changes and you never have to refi. We also have a Physicians 100% program, and of course this is great for our docs. The caveat that some of them may not like is that they can only go up to $417,000 with the 100% financing. They've got to have at least 680 middle credit scores and no bankruptcies in the last 4 years and no foreclosures in the past 7. This is a conventionally based program, and it is a portfolio program. So our investor lender never really sells this. They could sell it, but typically they're not going to sell it because these are going to be good long-term customers, and that's why they wouldn't sell them. The interest rates are going to be competitive. There's not going to be any origination fees. So again, the closing costs are going to be a little bit less. There's no income limits, which is a big thing. And this is just for, like all down payment assistance programs, just for primary residences only. So this is an excellent program for our docs, especially the young docs. So spread the word because they could very well benefit from this program. Our next program is called the Own a Home Down Payment Assistance Grant, and this is actually a grant. Unfortunately, it's only offered in certain counties, which would be Lee, Charlotte, Collier, DeSoto, Sarasota, Broward, Palm Beach, St. John's, and Volusia. But this program is not restricted to any occupations, and there's no first-time homebuyer requirement. And what happens is you've got to have a middle credit score of at least 660, and again, you can't have any bankruptcies in the last. It depends whether you get the conventional or the FHA version of this program. On the FHA version, the FHA guidelines is bankruptcies 2 years, foreclosures 3 years. Conventional, it's bankruptcies 4 years and foreclosures 7 years. So it'll just depend on if you do have those, at what timeline they occurred. One of the benefits of this program is it's a very high income and acquisition limits for these counties. So it's a very good deal, but you can't own any other real estate or non-rental real estate at the time of closing. So in other words, you can sell your house and you don't have to be a first-time home buyer. And if you sell your house, what would happen is you would sell your house, and if we had to do what they call a simultaneous closing, you'd sell your house, we'd close your house, and then later that day we would close on your new house. So again, this program is only for what is it? 10 counties? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 counties, but it is an excellent program, and it's helped a lot of people. Our next program is really for our credit challenge folks. But it's a great program, and it's for everybody. The credit scores that you have to have for this would be a middle score of 580 or higher. So really, anybody can qualify for this almost. With this one, again, there's no origination or sponsor fees, and that lowers your closing costs by between $2,000 and $3,000. The grants for the program is you'll get 2% of the 3.5% that the FHA minimum down payment requires, and you do not have to repay that grant. So you'll get 2% instead of 3.5% because you do have to have 1.5% down payment in there. This one will have mortgage insurance like all FHA loans do. You can possibly get a lender credit to help with the closing cost, but it won't be a lender credit of $3,000 or $4,000. It may be $1,500, $1,800 at the most. There's no income limits, which is great, and you're going to use standard FHA purchase price limits. And as far as the ratios go up to 54%, like regular FHA loans do. There's no home buyer's education required, so that's pretty easy. And there's no first-time home buyer's requirement. So this is a very good program for folks whose credit has taken hits from collections and that sort of thing that they just couldn't help. And a lot of times you'll have people that have really good credit, but they have medical collections that they just could not pay. And this would be a really good program for those folks. So just to let everybody know, we've got a lot more programs, and we pretty much are going to put you into the program that makes the most sense for you. So now we're going to talk a little bit about the process. So the process is this. Step one, you're going to get all of your financial docs together for the loan officer, and what you're going to do is you're going to go to the web page and you're going to see lender required documents. And you're going to go ahead and print that out. I would do that. I'd print it out, and whatever the documents seem to pertain to you, you're going to get that. If you've ever had a bankruptcy, you're going to have to get your bankruptcy docs together. If you've ever had a foreclosure, you're going to have to get your warranty deed from the house that went under foreclosure, and you would get that at the county tax records where the house was foreclosed on. And what you're going to do is you're going to call one of our agents, and they're going to speak to you for about 30 minutes. And they're going to basically assign the correct loan officer that has that particular program that we feel is going to be most beneficial to you. And, of course, that's going to depend on your credit scores. And if you in your house have ever owned a house, or you still own a house, or if you've ever had a bankruptcy, a foreclosure, what's your debt to income ratio, your occupation, that sort of thing. And we're going to filter all that out and then send you to the correct lender. That's one of the biggest benefits of working with us is you're not going to have your credit pulled a bunch of times because we're going to actually dial in on the bullseye lender that you're going to use. So then what you're going to do is you're going to scan all of your documents that are pertinent to your situation, and you're going to, for sure, get your last 45 days worth of pay stubs, your last 2 years tax returns, probably your last 2 years W-2 statements, and your last 2 months bank statements. That's front and back, because underwriters go over the entire bank statement, front and back. And you're going to scan any other documents that are on that list that really pertain to you. Then you're going to fill out the actual 1003 loan application, and the loan officer says that they're ready to go. Then you're going to email them all of the documents that are on that list so they can go ahead and hand those over to the processor and take a look at them and make sure nothing jumps out. To give you an idea is when I was lending money, there's always hair on every loan. There's no doubt about it. But most of the time we can get around it if we know it in the beginning. That's the whole key, is knowing what's happening in the very beginning. So don't think that you can hide secrets, because you're literally standing financially and credit worthy naked in front of the underwriter and the processor, and they will uncover anything that's hidden, I promise you. So Once you have the loan application filled out and the docs sent to our lender, then what we're going to do is we're going to get a pre-approval letter before we start looking at property, because you've got to have it you've got to have the pre-approval letter for every single offer. So whenever you send an offer in, you can't say, "Oh, I'll send you the pre-approval tomorrow," because they're not even going to look at the offer, especially these days in this seller-driven market. But I will tell you that you're going to have at least $3,500 in your bank account or retirement account for inspections and appraisal and closing cost. And you're going to have some additional money in your bank account. And again, we're going to try to negotiate all of the closing cost, or as much of the closing cost, out of this transaction. But again, in this seller-driven economy, there's a good chance we may not be able to get much in the way of closing cost, if any at all. But you never know until you actually are in the middle of the transaction. Okay, so now we're into step 2. So what you've done is you've gotten all of the documents to the loan officer. He's pulled your credit, and we've determined more than likely which loan we're going to use. And although sometimes it is dependent on the house itself and where it's at. So what happens is we go house shopping. One of our agents takes you house shopping. They set you up on MLS to get homes in the area and the price range that you can afford, and you're going to be getting them every day. Then we go out, we find a house, we put an offer in on a house, and when it's accepted, what you do first is you bring the earnest money deposit, usually $1,500, to the title company, and they're going to hold that in escrow. That money's yours all the way through the process, and we have never lost any money, any escrow money for any of our customers. So it's pretty safe, and ultimately that'll be used as part of your closing cost. Next thing is what we're going to do is we're going to we've got the house under contract, and we've got to get it inspected. So what we're going to do is we're going to have you contact one of our professional home inspectors, and you're going to go ahead and pay them the $400 to go over there and inspect the house. And our home inspector is going to provide us with a wind mitigation and a 4-point inspection report, and that will ultimately go to the insurance company. Now, we will recommend insurance companies and home inspectors, because the people that we use, they know exactly what to do, and they don't jerk you around. They don't take your money and then come back and say, "Oh, well, there's an additional charge for wind mitigation and a 4-point inspection, and that's going to be another $75 a report." Well, we're looking out for you the entire time, because it's our endeavor to try to make this as stress-free as possible on you. Now, it is a real estate transaction, and there are contracts, so there is a certain element of risk in all of it. But the closer that you stay to what we recommend, the easier it's going to be for you. Now, most of our home inspectors cost about $400, and this $400 does not go towards your closing cost. This money is for your protection and your protection only, and basically gives us a starting point as to what we need to ask to be repaired on that house, because a lot of things you can't see and we can't see. And I will tell you that if it has a swimming pool, we do need to have a leak detection company out there, because in this day and time, I'm telling you that a lot of people, not all, there's a lot of good people out there, but there's a lot of people that will try to unload a problem of theirs onto you, and then all of a sudden they're gone and you don't have any recourse. So we need to, if there's a swimming pool, we need to have a leak detection company as part of our inspection team. Anyway, at that point, then we get the home inspection report back within 10 days, and we really need it back within 7 or 8, because we need to have everything worked out by the end of day 10. And at that point, then, assuming we get everything worked out, then we now go to the next step, which is going to involve the appraisal. So step 3, we're almost there. So what happens now is you pay the lender to order the appraisal, and the lender orders the appraisal at their cost. They do not make any money off the appraisers. The appraisal must be paid for before the appraiser actually visits the property, because once he visits the property, he's going to charge the bank or the lender. So it's got to be paid before he goes to the property. And the cost is between $450 and $500. And this is part of your closing cost. Now, one thing you do need to remember is the home inspection and the appraisal money are non-refundable. That money is gone no matter what happens to the transaction. We will get your earnest money back, providing that we have, basically you have stayed within the guidelines of the contract. But we will get the money back if the deal goes south. Let's say the appraisal comes in lower than the contract sales price, then we send the appraisal back to the seller and ask them to reduce the purchase price. Normally they will reduce the sales price, and if they don't agree to lower the price, we get your money back. So that's pretty much how it works now. Sometimes if they're paying closing costs, they may say, well, you want a new roof, we'll put a new roof on there, but we're not going to pay any closing costs. And at that point, it's going to be up to you whether you want to move forward or not, or whether you're able to move forward or not. So at this point, the appraisal comes back, and the loan's been in underwriting for about 3 weeks, and you're about 2 weeks from closing. So it's time to start packing your bags. If the loan processor requests any further documentation regarding anything, please immediately provide it the next day, because in some cases the document that you provide may require additional supporting documentations. So please do not delay. Periodically you'll be speaking with the loan officer and or the processor, and you'll know when you should tell your landlord that you're moving. So you're going to stay in contact. We're all going to become very good friends during this period. Okay, so now we're at the end. We're clearing final underwriting conditions, and we're getting ready to close on the home. So what happens at this point is the lender may need some minor information to get a clear to close. Do not delay. Get them whatever they need ASAP. We've got timelines that we've got to stay within, and it's really up to you at this point how fast you get it back to them. So we get our clear to close from the lender, and we schedule a closing day and time. And at that point, you're going to want to have the utility set up in your name for that exact day, because the seller's not going to want to, they're not going to want to pay your utilities. Now, typically the electricity is what you will end up getting transferred, not transferred, but you'll apply for, and you'll get that set up. And a lot of times the water company will require that you bring them the closing docs. But get the utilities transferred as fast as you can. So we go to closing, and you bring your driver's license. If you have to wire any money, then you'll have to wire it. You cannot bring a certified check or a money order or a draft or any of that. All monies nowadays are required to be wired. There's a lot of fraud, and what's going to happen is you're going to double check to make sure that the title company's instructions that they've sent to you are the correct instructions, and that it is going directly into their escrow account. So you've got your driver's license and one more form of ID. It's going to take about an hour to close the transaction once we're there, and then you get to move in, and now you're a proud homeowner. And I want to thank everybody for coming today. If you've got any questions, please go ahead and ask me. You can ask me just about anything you want in terms of mortgages and real estate. So if we can help you, please let us know. We'd love to do so. Thanks again for coming, and good luck.